Hi, this is Alan Brochstein. I'm the managing partner at New Cannabis Ventures, and I also run the subscription service 420 Investor. And I want to take just a few minutes today as we wrap up 2018 and talk about really something kind of amazing that despite a really tough year for the market, with the index down 55% uh, in 2018, there were still 13 names that managed to rally in the space. And I wanted to talk about these names just very briefly and share some insight as to maybe what made these companies work at a time when most did not. And so let me start first by walking through the last 3 years. And this is the Global Cannabis Index in 2016 and in 2017. The index rallied about 90%, a little bit over 90% in both years. And this year, with one day to go, we're down 55%. So not a great year, but in the context of the longer term, we had a real big run up into the year end and into the beginning of this year. And since then, we've had a very sharp pullback. And I want to walk through just before we get started on these individual stocks, kind of the backdrop. And I want to remind everybody in 2016, we had the US elections, and that was a time when there were a lot of states that had ballot initiatives, and the biggest of which was California, obviously Massachusetts as well, Nevada. These passed. Arizona didn't pass. Maine passed. It didn't really matter that much. So it was definitely a banner year, but there was a changing of the guard at the White House, and that kind of put people on notice, and there was some profit taking that kicked in right after that. And then at the end of 2017, we had a massive run up as California was about to legalize. And this was compounded, I believe, because you had the advent of a new ETF. The symbol's MJ. Uh, and Alternative Harvest, I think it's called. I don't even pay that much attention to it. I pay more attention to the Horizons Fund, which is HMMJ on the TSX. But I think a lot of capital flowed into that new mutual fund. It was introduced right at the end of the year. It was actually an old ETF that had been revamped, and people thought they were buying California, but they were actually buying Canada. It was a funny thing. But you know, as we began the year, stocks spiked, and then all of a sudden, Jeff Sessions rescinded the Cole memo and really put the industry on notice that all the progress that's been made could be wiped out. And of course, it didn't play out that way. Um, as the year progressed, we had legalization in Canada, and there was a lot of hype, and you can see the run up from really from August 14th. The market was sitting at a 2018 low, and Constellation announced that it was taking a controlling stake in Canopy Growth, and this set off a lot of buying ahead of Canadian legalization in October, but also in the sense of there was a lot of thought, and some of it's played out, that there would be other cross-border, cross-industry type of strategic investors. And so we had a run up, and then since then the market's pulled back. What's happened? Basically, you've had weak overall markets across the board, number one. And number two, in particular, the Canadian legalization has really fallen short of what people had expected. There's been a limited supply and not that many points of distribution. And so the bottom line is people headed for the exits in a weak market. So that's where we find ourselves today. And what I wanted to talk about was, despite the pressure on the market in 2018, again, this index is down, and let me just show you over the last year, this index is down 55% as I speak, with one trading session to go. Despite this, there are 13 names that I've identified that are in the index currently, uh, that have been trading all year and that are up. And I want to just briefly walk through that. And it's a really good reminder that even when the overall market can be tough, sometimes some stories will shine through. And in this case, I think this is a lot. 13 companies that managed gains through all but the very last day of the year. And I think one of them might fall off, but for the most part, these should all manage to end the year in the green. So let's take them alphabetically, and I'm just going to try to share some thoughts. Before I get going, just one thing: I don't intend to give any sort of predictions at all about these stocks. So I'm really just kind of recounting the past and trying to explain, what made these stocks work. And then secondly, some of these companies are clients of New Cannabis Ventures, and I will call them out by name as I go through them. And just as a reminder, just like in general in New Cannabis Ventures, we do not recommend stocks. Now, 420 Investor, I do that, but on New Cannabis Ventures, we do not ever give investment advice. So this is just a discussion of the history of the last year for these companies. And so the first one is Alethea, and Alethea Health is actually listed in Canada with the symbol ALEF, but it trades also on the OTC with ALEAF as the symbol. And despite the stock being down rather dramatically from its peak, the stock is still up year to date. And interestingly, the stock was halted right at the end of 2017, and the first day of trading was in January. And so what happened was Alethea merged into Cannabo Health, and so you had two health clinics that merged. And without getting into all the details, a couple things that drove Alethea, and this is going to be a recurring theme, but one was an outside investment from the Cerullas. And so pay attention to this one, because when you see big investors entering into names, that has tended to be one of the identifying factors of success. So that was the first one, and then secondarily, uh, they announced that they're working on listing on the Nasdaq. So that was another positive for the company as well. Uh, and they also made progress in their core business on the LP side. So this is a Canadian LP. So that's the first one. In Alethea, with one day to go, is up 90% so far this year. The next one, I'm sure everybody's familiar with, and it's Canopy Growth. Canopy Growth is up. It's not up a lot. It's up 6%, to be clear, but it is up. And it's come down like a lot of the market, down more than 50% from its peak. And I think this year, what really drove Canopy Growth was the revenue. And although in the last quarter it was a little bit disappointing from the analyst consensus, they fell quite short. Still, it's pretty clear that Canopy Growth was, if not the best, one of the best positioned for legalization with a large inventory in hand. So, but clearly, what was the big story for Canopy Growth this year? At the end of 2017, near the end in October, they got that first investment from Constellation, and the stock never looked back, right? But this time, they got the second and final. Well, not the final. There probably will be an ultimate takeover at some point in the future. I don't mean to be forward-looking, but that's in the long term, that's probably where it's headed. Uh, but certainly, with Constellation taking control, paying a premium, and what have you, the stock advanced again, although this time it's pulled back in a weak market. So that's the second one. The third one is Chronos Group, and again, a strategic investor stepped in here. Chronos Group, with the data, goes up 29% in 2018, and interestingly, this came under attack. I think it was Citron that attacked Chronos Group and uh, with a short report. And so another little lesson there, those short reports aren't always right. This was a year where Chronos Group actually had a pretty good year even before the investment. And some of it was driven by the rumors. It was one of the ones that went up a lot on this after August 14th when Constellation made its announcement about Canopy Growth. And it had pulled back until last month, November, and it seems like people maybe caught wind of the pending Altria bid for Chronos to controlling stake. So they cut a deal very similar to Constellation Canopy Growth in terms of the way it was structured with an equity investment and then a warrant to acquire control in the future. The next one's the best one on the list in terms of performance, and that's CV Sciences. And CV Sciences is a CBD company. CVSI is the symbol. Uh, and it trades on the OTC and only the OTC. And the stock, and I'm not even showing you the whole thing. There you go. The stock had just an incredible run this year. And like I said, it's the best one, up 564%. And so the story here was this company was in the middle of some a legal issue with the SEC that was resolved. And but the bigger driver, I mean, that was certainly an important part of it. But the bigger driver of this one was just incredible revenue growth, big numbers and big growth, and that's what really drove the story here. We all know that CBD has become more and more mainstream in 2018, and this was a big beneficiary of that. So even though it spent the last 5 months or so consolidating these big gains, this stock uh, moved up from uh, 26 cents. I feel like that year-to-date gain is understated. Let's see. Where was it? Oh, I see. I'm looking at the wrong date. December, the end of December. There you go. So it had a very strong close at the end of December. Now I look at it, but so anyway, that's another big winner. Moving on, the next one is Hydropathy Carry. Now this is in last place among the 13, but it's still positive with the day to go, up just under 1%. And Hydropathy Carry was the old name. It's now called Hexo, and Hexo. What really drove the performance there, I'd say, primarily it was their big win in Quebec. They got the largest mandate by far as a supplier for Quebec, Hexo against an LP. But then secondarily, they were able to do the JV with Molson, and so which kind of sets them in position uh, uh, strategically going forward. So while the stocks pulled back a lot, despite the incredible downdraft in the overall market, it has managed to, at least as of Friday, be marginally up in 2018. The next one is Innovative Industrial Properties, the REIT, that trades on the New York Stock Exchange with IIPR. And IIPR just executed this year. And the stock right now is up a little bit over 25%. They raised their dividend. They raised capital and deployed capital, and they simply executed. So they became more diversified, and there was no competition. They're still the only New York Stock Exchange REIT focused on the cannabis space, and they've been out there now a little bit over 2 years, and they remain the only publicly traded REIT focused on the cannabis space. And so this was a year of execution, and it paid off for their investors. The next one is iAnthus, and look, I forgot to say Canopy Growth is a client, and I said I was going to disclose these. And the second one to disclose is iAnthus, and iAnthus. Whoops, I went back too far. iAnthus. Ended last year, I wanted to go back a little bit further, ended last year really weak. And so that was maybe what kind of set the stage for a little bit better 2018 than it might have been otherwise, but it still did very well. And iAnthus so far this year's up 70%. And I mentioned earlier, getting outside investors can really be a catalyst for the company. So that was one of the things that helped the stock. They got a $50 million investment from Gotham Green Partners. So that was definitely one very favorable thing. But beyond that, the company moved forward with some acquisitions in Florida, in New York, and really previously they were viewed as a Massachusetts play. That was really their big play, but now they've become really a big three-state play in terms of adding New York and Florida. So that was what drove iAnthus this year. All right, moving on. Another client of New Cannabis Ventures is Cusco Holdings. They were Kush Bottles to begin the year, and this one, as I speak, is up about 25%. And again, I want to talk about capital raising. You see this big volume right here. Sometimes you look at that and you think, wow, something's not right there. Indeed, it was correct. And they did a registered direct offering. It really weighed on the stock, but at the same time, it gave them a great balance sheet. Secondarily, I think more people discovered the company this year. They're covered by Cowen and Company. They're the only U.S. Operating company that's covered by Cowen, which is a major Wall Street investment firm. And I think that helped as well in terms of uh, getting a broader awareness. But importantly, these guys put up big revenue numbers, and organic growth was very high. And they also gave guidance for next year with sales expected to more than double to, I believe, 80 million or something like that. That's public record. So Cusco Holdings, another big winner in 2018. The next one is Maramed, and Maramed has had a great year so far. It's up 353%, so putting in second place among all the names that I'm mentioning on this video. And Maramed, uh, in addition to uh, posting robust revenue growth, I think an important thing, back to that same theme, they were able to pull in outside investment capital, and Navy Capital invested in Maramed, and I think that helped the stock. All right, the next one is Neptune, and Neptune is a company that's been trading for a while. It trades on the TSX and the NASDAQ with the same symbol NEPT. And this is an extraction focused ACMPR applicant. And I think there's uh, a lot of optimism about what this company is going to be able to do once it gets its license. And so the stock so far this year's up almost 10%. So it was one of the ones that managed a gain as well. And that company has transitioned itself to be focused mainly on the cannabis space after being a broad nutraceutical company. So the next one's another client at New Cannabis Ventures, for full disclosure, and that's Organigram. And so Organigram this year is up about 6%. Uh, yeah, 6%, and despite dropping 50% from its highs, all-time highs. And so, what happened to drive Organigram this year? I think is the recognition that the company was back on track. If you recall, there was a pesticide issue with the company last year. And it was revealed actually two years ago on New Year's Eve after the market closed, and it was something that the company had to contend with in the first part of 2017. And so by the middle of 2018, it became pretty clear that the company, I'm sorry, was back on track. And I think it benefited as well, as did Hexo, by the way, from the idea that there may be some consolidation in the Canadian licensed producer space. And given its market cap and its revenue, uh, it, it was likely at the top of people's lists in terms of acquisition candidates. So basically, the story on Organigram this year was execution and really a change in the perception, because the company had a really rough 2017, and by mid 2018, it was pretty clear that they were back on track. The next one is Origin House, and you may know this as Canna Royalty. That's what it says right there, and that's actually their legal name still, but they're in the process of changing that to Origin House. And Origin House had a great year, and they were able to raise capital. No strategic investors, but they did some nice capital raises. And I think what benefited this company was that they fundamentally shifted their business model a year ago, and the market just really didn't pick up on it until later this year. And so they did some transformational acquisitions, probably the most important of which was buying what I believe is the largest distributor in California, River. And so the business model change was to move from being a passive operator and I'm sorry, passive investor, to becoming an operator in the space. And they really focused in on California. And so I think that investors started to appreciate the company a little bit better as it shifted away from being a passive investor to an operator with a focus on California. And then the last one, again, is a New Cannabis Ventures client, and that's TerrAscend. And TerrAscend's another LP. Uh, they made a very big move late in the year. Just to back up a step, this is a company that's controlled by JW Asset Management. That's Jason Wild, the chairman of the board. who, along with Canopy Growth and Canopy Rivers, took control of this company that was announced in 2017. And the stock ran up later in the year, I think, because they shifted into the United States. So they're on the Canadian Stock Exchange, and they were able to. um they decided to uh, that they were going to enter the U.S. And as you may be aware, there are very few LPs that are operating in the United States. There's a few, and there'll probably be more. But TerrAscend kind of made that shift, and I think that resonated with investors. So uh, that's really it. I wanted to really highlight because I know it's been a rough year and people, on average, certainly lost money. It was pretty easy to lose money in stocks in general this year, certainly in the cannabis space. But I've just walked you through 13 companies, and there may be more. These are the ones that are in the index, but 13 companies that have managed gains despite the headwinds this year. And it leaves me pretty optimistic. I'm pretty optimistic about 2019 as it is. And I think the fact that we had 13 companies that were able to advance in 2018 despite really tough market conditions leaves me excited. So I appreciate you taking the time to listen, and I want to wish you a happy new year from Joel and me at New Cannabis Ventures. Take care.